Yeah, I think I'm gonna jump on my TikTok for some stock advice really quick, and it's gonna tell me to buy high and sell low.
Yeah. Yeah.
So,
That's the key to getting rich, right? Buy high, sell low.
I mean, that's what's happening right now. It looks like all those people that just bought it, it's tanking right now.
Yeah.
Um, this could be a short-term blip. We've seen this happen in July, I think. It happens. It happens several times a year.
Yeah.
Um, the emerging market stocks headed for biggest drop in a month. Yeah, I mean, probably July or so. I remember a pullback. Um, the thing is, I'm starting to. We talked about this before in another episode where you never know you were in it until afterwards. And some people, those people that are like, "Oh, recession's coming," like, they'll eventually look right. But you're
Yeah.
always looking. You're looking for that first sign, and there's every day there's a sign, right? But you can't ever figure out is this the sign that I've been looking for? And then that one dude lost a bunch of money. Um, we talked about him like a month ago,
Yeah.
and then there's another guy that lost like 25 billion, and now there's more issues going on in China, and the Fed's talking about easing. Are we starting to see the cracks where this thing starts to fall apart?
I think so. So you brought up an interesting point, and I really like it, which is that it's very easy for people just to point to signs. Like we've talked again on previous episodes where there's so much going on in the world right now, and there's so many kind of new money dynamics that you can't really point to, like for example, PE ratios and market caps, and point to those as like indicators of like the health of a company. Because like this guy here, David Ranson, saying that like the Evergrande thing is front and center today, and that's driving a lot of the downturn. But you know, everything's overvalued, everything's overstretched. But like, how do we know, right? How do we know until we're out of it that these are the things that were actually the triggers? So I thought that was a really interesting point you made.
Yeah, you don't. And then the thing is, you look back later after it happens. I saw this in 2001. I saw it in 2007 and eight. I seen it coming during COVID. Like we were looking at. I was talking COVID third week of January. Like you kind of knew something was
Yeah,
coming,
right.
and it's just like the next thing you know, the market's down like 25%. And this shit just happened so fast. It's like, God, you knew, you saw it, but there's so much noise in the world. You
Yeah,
can't figure out what you can't figure out the difference between something that just bad happened to somebody, it happened to a company, or if that was like the first sign. And you saw that during the financial collapse. Like there were signs that there's some bad shit about to happen. And then you also realize that market's pretty resilient, and it's not like just one bad thing happens and the whole thing topples over. But
yeah.
it's like you see a crack. I don't know. Have you ever had a chip in a windshield?
Yeah,
I feel like
yeah,
we're at that point where right now this is the chip in the windshield. And this morning did we hit that first bump where the first crack comes off of that chip. Now, if you go get that chip fixed, it'll stop. But if you don't, by the time winter comes and water gets in it and it freezes, your whole window's going to be splattered. And I just wonder if this is the window chip. Are we going to look back and say, hey, the remember the insanity, like what was going on with GameStop and
mhm, of course.
AMC, and you're like, we're buying stocks off of like meme shit right now. Like people are pouring in like hundreds of millions of dollars off a fucking meme right now. What? And that not like the tulip mania type of what the hell's going on right now? There's no more sound investing. People are we're at the casino right now. Um, we're not even betting smart either. It's put it all on hard eight, like fucking roll those dice, like,
That's what it feels like. It's what it feels like for sure.
and you feel like that was kind of peak insanity at the moment. And it's like, okay, then usually after that something happens, and then now we're seeing these little things. Now, okay, the market might shoot up 10,000 points in the next year. Who knows? But we're going to look back and say, hey, maybe when we were just buying stocks off of memes, that should have been a goddamn sign. Like,
Yeah.
And that's where that was kind of the apex. And now you see more and more of these stories, like Enron-esque, where shit just falls apart overnight. There's two guys and I lost like what 20, probably 25 billion, maybe 50 billion between the two of them in a very short time span. It's like, how do you just evaporate that much money?
Yeah,
like,
that's true.
You could give it away faster than they lost.
It's true. It's true. That's a big fire if you burnt all that money. Big fire.
Give me a marshmallow and a hot dog. I want to roast the shit out of that.
Yeah, for sure. So a couple thoughts here, James. Like, so the first one is you said this to me many years ago, which is that it's typically difficult to see what the trigger is that triggers a downturn. So like what that triggering event is. But I also thought, like, when I saw this headline this morning, that in the US, we like to think of the world as like US, like I don't know how to explain this, but like looking out at the world, and we are like on the top of the totem pole kind of thing. And if you think of like the '08 crash, and that's the only one that I'm familiar with, but like I assume crashes before that, they're typically like the triggering event is here, right? So you got the subprime mortgages and things that was here. The world is so interconnected now. Could we be blind to maybe the triggering event being, China's crackdown on tech, and that being, when we look back in the future, that being the triggering event to a downturn, and then we were blind to it because we didn't think it was on our side?
I mean, it's possible. They said Brexit was gonna, sink the market, and
That's right. Yeah.
Greece was gonna sink the EU, which would, sink us, and it didn't happen. Back to that, we're resilient. I don't know. I mean, I definitely think something in another market could trigger, but it's probably gonna, if it does happen, it's gonna be China. Short of something like a military action from another country, right? Financially, it's Singapore isn't going to like collapse the world. China could probably do something to set everyone off.
Right.
But that's not by itself, right? There'd have to be other underlying issues going on, such as our labor shortages. I'm guessing, I've now looked in a bit. My guess is debt has been rising for most people. There's a handful of people that are making more money, but I gotta imagine you're starting to see debt rise now. There's a lot of other underlying issues that it's kind of just waiting for something else to be the trigger. It wouldn't completely fail because of something China did. We would have to be in bad shape.
Mm-hmm.
It's like getting a cold. If you gotta have a bad immune system, and you get that little virus, and then it takes you out, right? The virus by itself don't take you out. You had to have a weak immune system, and I kind of feel like
point.
do we have enough cracks in our own economy right now? Supply chain issues, labor issues, money issues all the way around, an unmotivated workforce, overspending, overconsumption, issues, paying mortgages. Like we're in a tough spot. So now does it just take something to set you off and go over that tipping point?
Yeah, great point. So I mean, speaking of cracks and speaking of tipping points, let's kind of dive into the details on this. So at least today, so here's Evergrande and like the issues that they're facing, which is driving the market down today, apparently. What any thoughts here, James, as you see kind of this stuff, these numbers?
I mean, the first thing I saw right there is regulators have warned that it's 350 billion of liabilities. Like,
yeah,
dude, that was a whole stimulus plan for us in 2008. They put out like $300 billion. Like, that was a whole stimulus plan. That's just this one company's liabilities.
That's
Um,
crazy.
but you can see like when something like that gets toppled over, how it could really drag down a lot of other shit. And it's that thing of like when a restaurant claims bankruptcy and then it like hurts the landlord, and then the people that are supplying the food to the restaurant, the supplier gets screwed, and there's like this chain reaction. Like where's the chain reaction of, when you owe 350 billion?
Yeah,
Like
it's
that's got to be a
catastrophic.
pretty that shockwave's got to hurt, right?
Yeah,
Which might set off other shockwaves. And I think that's what, is it too big to fail? I don't know. Um,
yeah,
Again, you see this story though, and you combine it with the hedge fund guy that lost 20 billion, and there's another guy we were talking about that he lost 25
yeah,
billion. How many of those got to happen before you go, maybe we should be concerned?
yeah. I mean, here's a chart that actually highlights that point you're making there. These are the founders, I suppose, in China that have lost billions and billions of dollars just recently.
That's gonna
It's
that's
staggering.
that's gonna make 100, close to 100 billion, and just this year.
Yeah,
Oh,
yeah,
yeah, maybe a little less than that, but hey, are these the warning signs? Like, but then you see like the cracks going on over here. Like I just drove by, I saw a premium for 3.99, which for some reason it used to be gas was like separated by 10 cents. Um, Regular would be 2.99, and middle grade would be 3.09, and then premium would be 3.19. Now
mhm.
premium's 60 cents more than regular. But I saw premium at 3.99, and I'm like, shit, are gas prices really going to go up that much? And that we already had inflation issues. What do you think is going to happen when the cost of moving all our goods and food goes up because of gas prices? So
Yeah,
I'm seeing more and more cracks that it's just not a good sign. And now, who knows? They might try to push more money through, um, more stimulus or more unemployment. The $3.5 trillion infrastructure. Like we already have an inflation problem. You want to go dump more trillions in? I Yeah, I don't know, man.
I can't really think of a time where the at least the economic base is like has been as unstable. I mean, if you because at least you like to believe that we can work through most problems, but such as the labor shortage, I mean, really, it feels like we're really like we're standing on ice on water, and really anything can topple us over at this point.
I mean, you got our hospitals are struggling right now. I mean, Ken, you
Yeah,
think about it. We're one variant away from the world ending. If you think about it,
yeah,
if we get the wrong variant, we can't even handle it right now. We have a labor shortage, staffing shortage, within our healthcare industry right now. And if RNs just decided not to show up, it takes like 3 years to become an RN. You can't just snap your fingers and fix that shit. So
yeah,
we're struggling now, and COVID's not even like really. It's straining us, but it's straining us because we're short on staff. So what happens? What happens if a slightly more um, variant come along that's slightly more terrible? What happens then? Like then that's where we are on the teeter totter. We're right on the edge of just disaster right now.
yeah,
We're not semiconductors. I can't buy a truck right now. If it's 4 or 5 months to get a
yes.
truck, what happens if we got to go to war? Like, who's going to make the semiconductors?
Oh
But
yeah, great point.
I don't think we're going to go to war with China. But what if we had to go to war with China and they're making all the chips that we need to go to war with them? How the
Yeah,
hell's that work? Like, it's, but it's the supply chain issues too. Across the board, it's food, it's semiconductors, it's electronics. Um, every time you try to buy something, it's like 6 weeks. It's like, I'm just trying to get some honey mustard.
The bees are not working either.
What do you mean it's gonna be 6 months ago? What the hell? I just want some honey. Like, how am I gonna eat my chicken tenders? It's like my dad was complaining. He's trying to order shit from Kroger because all stuff's out of stock. And I'm like, yeah, people aren't working. Like,
yeah.
I don't know.
Yeah, it's just scary to think about. I mean, like every story like this on an isolated basis is just another story, but like when you look at it over the aggregate, like we just did, it's just a scary place to be right now.
You also you look at the spacing of it, and it's all happening in a short period of time. We're not hearing about one of these stories once a year.
Yeah,
it's almost like they're happening a little more often.
Mm-hmm.
So again, I mean, we were due for a little bit of a pullback. Is this a pullback or is this the beginning of the 20% downturn? And if these people, 20%, they're predicting 20%, and it could only be 10 or it could be 30. And when you think about it, looking at the Dow at 35,000, knock off 30%. Is that unbelievable right now?
Not at all.
So would it be that unbelievable to see it go down to like 25,000? I don't think that's I don't think it's that unbelievable. So, I mean, what did we think was going to happen? Game, we're buying stocks based off of memes. What could go wrong?
What could go wrong?
What the hell could go wrong, right? Bitcoin was crashing too. Well, cryptos were crashing today too, I think. I could have swore I saw.
I definitely saw that.
Okay, yeah, I saw something like, and that's why I think people think that when the stock market goes down, people start piling money into crypto. From what I've seen, the crypto market seems to just follow the stock market. Like, I don't see that. It's not like an inverse reaction. I think the stock market's crashing, so people seem to think that people go to crypto because it's a safe haven. And then if you watch, it crashes just like the same time when the stock market crashes. So I'm not sure that theory works either.
Yeah. I think that I read somewhere or heard somewhere that like diversification is hard because of that. Like people assume that, oh, you can hedge with this asset class, you can hedge with that asset class. But the reality is like human beings are, as soon as we get scared, we pull our money out of everything. It's not just, so I don't think it's true that crypto is that hedge that people believe it is.
Yeah, I just saw the VIX is up, obviously, and gold and silver's up. So, I mean, it's all little signs. You try to put them all together, and you try to figure out what's going on. But you just made a point, and it's something I've said, you said. It's a lot of this money that went in the market in the last 12 months. People are eventually going to need that money. And when the shit hits the fan, they're just going to pull all that money out. They're not the people that had 500, 600, or $1 million plus in the market in the long term. They were throwing in 10, 20 grand trying to make some quick bucks. And then sooner or later, they're gonna need that money. And I think that's gonna be another one of those cracks in the window when you start seeing outflows and people start cashing all that shit in. So as soon as like people start seeing that number drop, like you said, they panic and they sell it. Because they were almost investing with the money that they shouldn't have been investing to begin with. They couldn't afford to lose it. And then it's like, boom, you got that emotional pullout. And that's why, like, going down 25,000 seems realistic to me. Going to 22,000 seems realistic. If you had a massive outflow to go with that crash. Doesn't mean it's going to happen. But I think
you said it on another one of your videos, James. You said on another one of your videos about the froth or the foam on the beer. I think that was a really good analogy because that's like you said, it wouldn't be surprising if we just went back to the levels where everybody pulled all their free money out, and we're back to the levels where it's where it's like the actual people that can afford to be in the market long term. We just remove the foam on the beer, so to speak.
I'm sure there's someone out there that does real like chart analysis and technical analysis that says I'm stupid. Go knock yourself out. I look at any trend lines, even outside of the stock market. If I was doing that with inventory or something that's going on with a business metric, I would do the same thing. And I just look at, the most recent trend, a few years. Trends never stay the same. But I would look at the most recent years and say, this was the trajectory we were on before the federal government dumped in trillions of fucking dollars. And I would just draw that line across the trend and say, okay, this is where we should be in 2021 based off that trend, with obviously highs and lows in the middle. And then everything above that's like the beer foam. Like, and sooner or later that foam dissipates. It's this little like frost on top. It's nice and fluffy, looks cool, but it eventually flattens out. And it seems like that's now the other question is maybe where that spike started, maybe that's where the new trend starts. In 3 years from now, we'll be drawing a line from that starting point. So I don't know if that's the new normal and that's the new trend, or if it's what I call the beer foam. So I have to keep telling myself, where would we be right now if the government didn't intervene and put trillions upon trillions of dollars in the market? Because unless that continues, that trend shouldn't continue. And I think when you think about that, we're not talking about these stock numbers right now. We're only there because of the amount of liquidity that was pumped into the market. They keep printing money, then this is the new trend. It sounds like they're not going to keep printing money. So I don't know. Go get yourself a nice frosted mug and a Foster's.
Beer foam, yeah, for sure.
Yeah, I'm just looking at Bloomberg here. It's kind of ugly day out there right now.
Oh, it's awful.
Downtown 525. Interesting enough, even the Nasdaq is down even more percentage wise. So this is the everything bubble though, man. Like lumber. Remember lumber? Like,
yep.
It was cheaper for me to buy a double whopper than it was to buy a goddamn 2x4. Like the lumber bubble, the people lined up around houses 30 deep. I've had, screw the news. I don't need the news. I got real stories from people like 30 bids went on a house over ask, and they put their bid in and they were number 8. Like, tell me that's not mania. Like, buying stocks on memes, 30 offers on houses, lumbers that cost as much as a filet mignon. Like, what? Like, do I want to get a steak tonight or do I want a 2x4? Like, tell me that's not mania. Like, you hope to God that's not the new normal. If you're rich, you don't care, but if you're a middle class and bull, you're screwed. So
yeah, that's interesting, and it's probably a topic for another video. But like, maybe if you look at it through that lens, like, we can be a little bit less scared about this kind of thing with these net worths, because maybe those are beer foam net worths, and all that's happening is they're just coming back down to earth.
I think there's a whole lot of beer foam out there. So like someone didn't like tilt the glass right and make sure that the big head didn't happen. And it's we always talk about it. Everyone looks good in the bull market, and a lot of this shit was propped up by government money. That plug is pretty much pulled now unless they continue. I don't think we can be surprised. A lot of these people are probably getting away with tactics and shit, and like these things that worked really well when there's just like nonstop ridiculous amount of liquidity, and then it's not that easy anymore. So stocks Europe 600 is down. I mean, shit, I don't know. Hey, look at natural gas prices are up, propane prices are up, regular gas prices are up. These are usually signs that are not good for us. But think about it, Kenny. Like, you need natural gas to like cook food, for example. powers generators. It heats homes. It heats restaurants. It runs
Yeah.
processed food somewhere, and then the gas prices are up, and then they got to truck that shit. The freighters take everywhere you go. Shit's about to get more expensive, right? I don't know what's going to happen here. Yeah, could just be a blip. You know, the market might bounce back tomorrow. Or the thing is, I think a lot of people think this all happens overnight. The stock market's not going to drop by 20,000 tomorrow.
Mm-hmm.
It's one of those like slowly eroding. It's a creeping erosion that over 6 months it drops 10,000 points. And the thing is like you don't fully realize it until it's down like 6,000, because you get this like optimism. It's going to bounce back. It's going to be a big day, and then it's like you're 6 months in. It's like, oh shit, it is down 20%. Like,
yeah. Yeah. So when you open your eyes and look at your 401k,
like, oh, I guess I am working to 65. That's all I got for oh shit, hang on a second. We worked to start trading in October, 2 years after IPO crash. Talking about big big money losses. As you remember that one.
Yeah, for sure.
Anyways, man, that's all I got for this one.
All right, sounds good.
Okay.